Hi, everyone. So, here are my favorite ideas that I think are most interesting to me at the moment at also reasonable prices. So, if I was to say which one would be number one right now, I think Nelnet is probably number one on my list at the moment. But let me go through the whole list and you see what you think. So, some of these companies I actually have already invested in, and they're still on this list because I think they're at reasonable prices. Now, I have a watch list where I have other very good companies. Some are even better than these companies, but the prices are unreasonable in my eyes. So this is what I think is the best at the best price at the moment. Now, some of these companies aren't just in the US, they're in different countries of the world. So you're going to need a broker that will give you access to those. I use Interactive Brokers. There's a link in the description for that. All right, the first company on my list that I wanted to share is Embracer. Embracer Group, I think there is something in the business concept here. They're acquiring all the different gaming businesses throughout. They started in the Scandinavian countries. Now they're sort of more global, and they've built up a lot of this IP from these games. Goat Simulator, Settlers of Catan, board games. There's a lot of different pieces here. It's a big conglomerate now of games, essentially, and some really cool IP. And something I really like about how they're approaching the business is they're giving the creative studios that they acquired time and resources to do the creative work that they can. There's no really strict deadlines. They can just bring out quality rather than someone like EA Sports with the Madden games, which get a lot of complaints because they're just phoning it in each year and it hasn't really developed. It's because there's a schedule, like a deadline that needs to be met each year, and that stifles creativity. And I think Embracer have got the balance just right. I think Lars, the CEO, is a very inspirational guy and is a great leader in showing great management skills here. But something that I don't like is that with all these acquisitions, they've been issuing stock like crazy. So that is fine when their stock was probably crazy priced, but now the stock has come back quite a lot. I'm really interested to see how they develop into that new strategy where they really should be just now optimizing what they have, turning it into really a profitable business, and the acquisition engine should slow down now, and now they can't leverage their own stock price. But time will tell, and that's what I'm waiting for. So I'm not comfortable with my valuation work at the moment because I can't get a read on future stock dilution. That's the issue I'm facing, but it's a very interesting company that I'm watching because I love the IP. Okay, next up is Nelnet, which I said earlier. Now, I've already made an investment into Nelnet. It's a small one, and I'm going to hopefully be adding more over time as I build up some more confidence in this one. But so far, so good. I think it's a pretty misunderstood business because they're a conglomerate and they have all these different parts that are a little bit complicated in their own right. But this is all about great management here and a great track record of what they've done in the past. I'm feeling really good about this one. I'm feeling good about the valuation and how there's a lot of hidden value in this because of the way that they have to do reporting. Some of the investments that they've made, they only had to write in their book value like from 2020, like the last transaction that happened in that particular private business. And it's now 2023 and the value has increased significantly in those investments, but it's not showing up in their book value. And everyone's looking at price to book value as a measure of valuation here. And I think the book value number should be significantly higher. That's what I see in Nelnet. That's why I think this is a very interesting investment because it's such a good company and I think it's undervalued at the same time. I'm looking forward to following this one along, adding to it as I can, and I think this will be one of the more reliable positions in my portfolio moving forward. Next up in today's list is Terravest, which is also a company I have already made an investment in. I think they also have great management. The theme here is great management, by the way. I'm very attracted to management that I think are exceptional, outsider style management that I can put a lot of trust in, and I think the incentives are right and all that type of stuff. Terravest, I think there's just a lot of opportunity to come. I think that it has the three legs of Chuck Akery's three-legged stool that I like to look at as well, which is a long runway for growth, strong return on invested capital, and great management. And I also think this is at a very fair price. I don't think it's like crazy bargain price or anything like that, but I think it's a fair price, and that's worth adding to considering the growth prospects. So the next company is Hinghams Institute for Savings. So it's it's a bank and it inherently has leverage, which we're all learning about at the moment. I think the short to medium term macro issues with the rapidly increasing interest rates and a softer landing environment has really caused the price of this share to come back dramatically. Fair enough. The banking world is now uncertain, which makes a lot of sense that people are fleeing from that. But I think because Hingham is such a good operator and they have exceptionally low costs for a bank of their size. Their management strategy and management is super solid that I just think that they can weather this storm, which I think is a storm and it could be a long storm. I don't know how long it's going to be for, but I think they're one of the stronger banks out there. And I think that if they can get through this, there's a lot of upside on the other side of this, depending on a few factors, and I probably need to learn how to stress test this a little further. This is probably, from a strategy point of view, one of the easier banks to understand that's out there, but running a bank's kind of delicate because of all that leverage. It's also kind of competitive. That inherent leverage just makes things a little bit more risky. So I'm watching this one closely. I'm not going to try to time the market on this one. I'm just going to keep an eye on it until it becomes like a no-brainer in my head. And for it to be a no-brainer, I have to almost be certain that it's not going to break. So the next company is Volex. And I really like this business because, again, management team and what they've been able to do in the past sort of 10 or so years and turn this business around from a very low margin, pretty average, I would say terrible business, to a growing, profitable, acquiring, good capital allocator business that has a long runway now ahead of it. And it's really changed the fortunes for Volex investors because the main investor, Nathaniel Rothschild, came in as the CEO and chairman and turned this thing around, which is really impressive. I really like that they've diversified the business into different segments, which like electric vehicles, medical, consumer, cloud storage centers, and they've also got geographic diversification as well. They've got places in Mexico and India and China and Indonesia and Poland and Turkey, and they've got now a really good platform for them to really drive growth forward, I think. I think there's a long runway here because electric cables are going to be pretty important for a lot of different industries moving forward as we go more electric. I think they've got a good capital allocation plan in place with good return on invested capital numbers, and the price is in the ballpark of what I'm looking for. The only issue I'm getting to at the moment is, do I feel like I really understand the competition? It is a more competitive space. It's definitely, they're not in a monopoly or anything like that. Therefore, I've just got to get my head around the competition a bit more. Now I turn to DSW Capital out of England. It's a tiny micro-cap company, which I think is very interesting because it has obviously a long runway to grow into. What they do is they operate a licensing business in the financial services world. People come and work under the DSW brand, get a lot of back office support, and run their financial operations, whether it being mergers and acquisition businesses or whether it is tax services or wealth management services or whatever financial related services there are. This is mostly in the north of England, but I just think there's a long runway here to keep expanding this out. Management is going to be key in this one. Can they execute on their growth plans and can they attract more people into their business? Because as they attract more people into their business, this thing will start to snowball, which is really cool. I love how asset light this business is as well. Essentially needs nothing to grow, which is really cool. They're diversified across multiple different geographic regions around Northern England, plus multiple different business segments, which I like. And the only thing is just how attractive of a proposition is this to get more fee earners into the business. That's something that I think has always been a bit of a grind, and I want to see that maybe accelerate into the future, but I'm probably going to start nibbling at this one. Now, last for today is EdiliziAcrobatica. I really like this asset-light model as well. I like management, but I also don't quite know enough about management. I haven't spent enough time studying how the culture is at this business. They seem to be doing a lot of publicity stunts, which is either obnoxious or it's genius. I'm hoping it's genius. I think they need to have some publicity, but I don't know, it rubs me the wrong way sometimes. I think they overpaid for their acquisition into Dubai. I guess it wasn't a very big acquisition. I go through all of this in detail, by the way, in all my deeper dives into these companies, but I'm just going over the high level stuff here at the moment for you to go in and dig deeper. Let me go back to what I was saying. The Dubai deal, I think they overpaid, but it wasn't too big of a deal, and they get hopefully some benefits from a marketing publicity point of view because now they've got the Burj Khalifa that they're going to be servicing. DesWLAcrobatica, facade, window cleaning, renovating people who jump off the edge of the buildings and abseil down and do the fixing. It's far better than scaffolding, far more affordable. Another issue I have with this business is they're sort of coming out of boom time earnings as the government grants were issued to help reinvigorate the economy after COVID, and especially on facade and building renovations work, they got a lot of benefits from that. So I guess I just don't know if they can hold those levels after a big jump up. I'm waiting to sort of see and get a feel for it, and I'm wanting to see how management will handle tougher conditions. So there's still a bit of work to do on that one, but I really like this business. I think it's got a lot of opportunity to grow, not just further throughout Italy, but throughout Europe and throughout the Middle East. And I think they do offer a superior service, and it's quite simple and it's quite necessary. So I like a lot of that in terms of just an overall business. Now, there are positions in my portfolio that I would add to, but I just don't think that they're bargains at the moment. KPG, for example, I'd definitely add to if it was a bargain. SDI, Technion, Berkshire Hathaway, Markel. If any of them were even around, what I would say is like just a bit of a discount on fair value, or because I'm not confident with my valuation work whether I'm really spot on, because I can never predict the future. So my valuation work is just a ballpark. If I need a discount on that valuation just to feel like I'm not going to lose money, I would invest in those companies all if I could, and would buy more at more attractive prices. And I think this graph here on the screen is really showing my attitude towards all of these ideas and all of my investments that I have, is that return on invested capital, the ability for the business to use that well, is going to drive investment results over the longer term. But even longer than that, it's all about people and culture. And I put so much emphasis on management. I would say that's the biggest emphasis that I put on any of my investments, is the management. And once I can feel comfortable and really confident with management, that's when I start to build significant size positions in a business. So, and that's the plan moving forward. So this graph is I'm going to try to drill this into my brain, because I think it's a really good way to think about the business and go, okay, what is the most important things here for me as a long-term investor? Is the return on invested capital, the ability for them to reinvest their money at good rates for a long period of time, yet their people and their management and their culture is exceptional, and I can give my money to these businesses and essentially trust the management team. That's the big key here. Now, it's obviously very difficult to figure out whether you can trust somebody, especially if you don't meet them. So I find it important to try to talk to them in some way. And if I can't, I'm just trying to learn as much as I can. And that's going to be the reason I invest in companies. Is going to be trust in management. And if it was easy, we'd all be rich. Therefore, I know it's hard. And I hope this graph helps you. I hope the companies that I talked about today are interesting. Please watch my other videos on those companies, because I go into far more detail on them. This was just a bit of a video just to highlight that some of these are at really good prices that we probably deserve to look into a bit more. All right, I'll see you in the next video.